Hello, everybody, and welcome to How to Invest. My name is Spencer. Just a little background. I'm a 20-year-old who is just interested in the stock market and investing in general. This is not any sort of financial advice or professional advice. I am just a retail investor. I just wanted to give my 2 cents on the Tesla stock. I've been getting a lot of questions from family members, friends, individuals. Anyone who knows me that I'm invested in this stock has basically been reaching out just to get my 2 cents. And I thought I'd share it on YouTube just so I could save me some time so I won't have to repeat myself. And hopefully some people that I don't know tune in and continue to come back and find out my opinion on other stocks and market-wide trends. So if you haven't seen, Tesla's been on quite the downtrend recently. And this article came out about 4 days ago. It's the 8th right now as I'm recording this. Their biggest investor, Ron Barron, his firm sold 1.8 million shares of Tesla, which I think the total dollar amount came out to, I think it was slightly above $2 billion, or maybe $1.6 billion. I'm not quite sure. So if you didn't get to watch this interview or read the article, some of the general points was that he started selling back in August, which the average price was around 400 back then, and he said he continued to sell as it went up to 900, and the total average price that he sold was around 650. The one thing that I took away from this was that just how hard it is to gauge where the stock price really will go, considering this is such a volatile stock. He left about 30% on the table with his average selling price, which isn't bad in my opinion, considering he was already up over 20x because he bought in around the 30 range after the split adjusted. But the reason I am not selling is just because I don't feel comfortable trying to guess the bottom. While you can do that, and I could have saved a lot of more money and deployed it into other areas, I don't feel comfortable guessing the bottom of here just because it is such a rapid stock and you never know. It could go up 30% in a day, and then I never like buying a stock after it's already up 30%, 20%. I'd rather buy on downtrends. That's why I didn't sell out of my whole position or hedge any of mine, because in my opinion, my position's not full yet, and I would hope for it to drop even more. So the reason that he sold, in the interview he was saying, was not because he thinks that the company has changed at all and he's not bullish on it anymore, but more to right-size his position and his portfolio. It had become too big for his portfolio and was taking up too much. So if Tesla would go down one day, then probably his portfolio would go down because it was taking up too big a percentage point. And as he's a leader of a firm, you have to have a lot of risk management guidelines, and he was probably required to by his rules or the firm's rules. He says he still owns a huge stake, and in the next 10 years could even be $2,000 a share, and he said he could even go 10 times more than that. So just to emphasize how volatile this stock is and how exponential it could get over time, and just how little people know and what their projections are. But if we're looking into the short term, I'll go over to the technical chart with the candlesticks. So if we're looking to see when this will stop falling, which is a question I've gotten a lot, is when will this bottom out, or when will you start buying in? And to answer the first question is, when will it bottom out? My guess is probably in the 450 range, the 400 price range, just because we do have some decent support levels here, because it was a good resistance before on the way up, and it took a couple months to break, and there's no real resistances in between there that are visible in the weak interval candles. So if we do fall there from these current prices, it will be just about 20% to 450, which I think would be pretty healthy, considering the stock is still over that 1,600% over the past 2 years. Which anyone who follows the stock market just knows that that is absolutely insane. And if you're getting over even 100% return in 2 years, you're doing something right. Let alone 1,600. So if it falls around to the 450 range, it will be only around 700% up, but becomes much more attractable just from a 5 to 10 year looking out period on returns on your money. If it does happen to break this support level, which it's a little early to say that, the only next support is in the 300 range for a little bit, and it could even go down to in the $200 range just because there's not too much support. From a when I'm buying in standpoint, it becomes very intriguing to me just from a technical analysis in the 400 ranges. I would have to average up because my average price is in the 60s, but I would not mind averaging up for this stock over the next 5 to 10 years. If I'm buying a short-term play, I would not really feel comfortable buying in at these levels just because if we are going to the valuation, it is still very, very rich. As we go here. Today, the intraday high was 573 billion still. So if we take out 20% of that, it would still be around 450 billion. The 20% coming from the 20% price decrease if we hit the support levels at 450, which I think it will, because today would have been the day we saw a reversal if it were to come, because it's been on it's been the Titanic recently, just sinking. But we got great news on Friday from the jobs report, posting better than expected numbers, and then we got the stimulus bill passed on Sunday. So you would think if it were to be a reversal, it would have been today. But even the overall market isn't too bullish. A lot of stocks are still down, but this one is definitely underperforming the market. If we look at the market cap, 573, that's still more than every other automaker combined, which is still very, very rich. For it to be anywhere near attractable for a valuation standpoint, my opinion, I would think it would have to be at least under 250 billion for it to be attractive. That it would be down by at least half. So the P ratio should be down much, much further. If it would go down by half, it would be about 75 in the 70 range, which is still very, very high. I think slightly inaccurate because the growth on this company, I do think, will outperform analyst experts, and I think that the multiple will increase as the stock price recovers too. So not quite the most accurate PE, which forward P's never are. It's always just a bet on their projections and future numbers, which is, it's always hard to tell in any company. So at what valuation will I be buying at? If it goes into the 400 billion valuations, it's very intriguing. Like I said, the $400 range too. If it gets under there, I will start buying. Definitely. If it hits anywhere in the 300 billion, 390, I will start buying. If it hits under 350, I'll start buying more heavily. And if it hits anywhere under 300 billion, I will buy very, very heavy. Might even consider going on margin, which I do not typically do. But that's just an absolute steal if you can get this under $200 billion or under $300 billion. Considering what they already have, all the factories that they have, all the cars on the road, and their autonomous driving already, I think that would be an absolute steal. If we compare this to other EV stocks, it is still quite rich. So let's go to NIO and look at the valuation. Statistics. NIO's only a $67 billion valuation, so almost a tenth of Tesla. And now they are nowhere as near big as Tesla right now. It's in a much bigger market than the United States, which is Tesla's main market right now, but it will be China, and probably this next year or the years to come. Just because the total addressable market is just so much bigger in China, and even India as they grow out their India plans. If we look at Churchill Capital, which I know a lot of retail investors are invested in, they don't have any cars out on the road. They don't have any revenue. They don't have anything. And the market cap's wrong because they don't include the shares outstanding. And there's a lot of shares that are just floating around. It's really around, I think it's still around 40, which is very, very rich considering they don't have any cars on the road. And just 2 years ago, Tesla was in the 30 to 40 range. So if Tesla gets to 10 times that, considering the advantage that they have on their other competitors, I think that it would be quite the attractive price. As to realistic expectations for the chart, I personally think that it will retest these 450 ranges for at least a couple months. If it does happen to go below, I see a very low probability of it reaching the 200 range again, but it very well could. I would probably put it in the single digits, but I think it will test the 450s and go snagged it for a little bit. If it stays around this area, I probably won't be buying too heavy. I'll probably be looking to other stocks in the stock market just because of this recent bear market. There's a lot of good deals out there, and I already have quite a big position in Tesla compared to the rest of my portfolio, and I would like to just diversify a little bit. I'm not always the biggest fan of diversification, but I think it helps, especially when we're in bear markets like this, just to hedge your bets and not put all your eggs in one basket. So those are some of my thoughts. Thanks for listening. Tune in again if you liked.